Hi, it's the Fat Day Trader here and welcome back to my channel. In this one, I'm going to deliver something very special because I know you're all hungry for success. I will be revealing a complete trading strategy for the Nasdaq 100. Now, you probably already know what the Nasdaq is, so I won't waste time with any explanations, but what I will say is it's a very volatile stock market index and you could potentially make a lot of money trading it. That is, if you have the right strategy, of course. Um, all right, let's tuck in. What you will need is a trading account with a broker that allows you to trade the Nasdaq. For any of you that are interested, I have been trading with TIO Markets for about a year. They can provide you with everything you need to trade the kind of trading strategy I'm going to show you here. So if you don't have an account with them, head over to tiomarkets.com and open one there. What you need to do is start with a clean Nasdaq chart on the 1-hour time frame, like I have here. The first thing you want to do is click Insert at the top left-hand side of the trading platform. Then go to Indicators, Trend, and click on the Moving Average indicator. Now what we want to do is add a 10-period simple moving average. Configure the parameters like this. Then click OK. There it is, nice. Now what you need to do is repeat that process to add a 50-period simple moving average. But this time, change the color to something different to help you differentiate between the two. Click OK, and there it is as well. Now one more time. We need to repeat this process again to add a third moving average. But this time, let's set the period to 200 and change the color to something different. That's it. What we want on the chart is 3 simple moving averages of different colors. One calculating the average price for the last 10 periods, one for the last 50 periods, and one calculating the average price for the last 200 periods. What this will help us with is identifying the short-term, medium-term, and longer-term trend. Because the way this trading strategy works is by looking for trading signals in the direction of the trend. These moving averages will help us with that. Does it sound good? Yep, it's as simple as that. This strategy is so simple that even a beginner can understand and use it. The only thing that is required is a basic understanding of how to read the charts and identify the trend. So, this is how the strategy works. When the price is above all 3 moving averages, you should be bullish, which means you should only be looking for buying opportunities. When the price is below all 3 moving averages, you should be bearish, which means you should only be looking for selling opportunities. Is it all clear so far? Okay, good. If you understand and apply this to your trading, you will already be ahead of the average trader. Most people who try trading don't have a methodology and usually end up getting caught on the wrong side of the market. If it's not that, they try to trade every up and down movement, which ends up getting them into trouble. No, don't do that. What you should be doing is identifying the trend and trading in the direction of the trend. There is a well-known saying in the trading community, that is, the trend is your friend. And for good reason. This is what will improve your probabilities of success. So now you know what direction you should be trading in. The next question is when to buy or sell, or what are the trading signals for this strategy? I will also keep this simple. When the price is above all 3 moving averages, you should only be looking for opportunities to buy. The buy signal occurs on the first candle that closes above all 3 moving averages. You can buy on the open of the next candle. Look at this example here. This is the first candle that closed above all 3 moving averages. That's the signal. So as soon as the next candle opens here, you can buy. Do you get it? Okay. Now the opposite is true for the sell signal. When the price is below all 3 moving averages, you should only be looking for opportunities to sell. The sell signal occurs on the first candle that closes below all 3 moving averages, and you can sell on the open of the next candle. Let me show you an example. Here. You see this candle? It closed below all 3 moving averages. That would be a valid sell signal, so you could sell as soon as the next candle opens. Okay? It's that simple. And I probably know what you are about to say. What about false signals? What should I do if price starts going in the opposite direction? Well, um, this is where your risk management comes in. There isn't a trading system that will generate winning signals 100% of the time. You should know that every trading system has losing streaks. You just need to implement rules to limit losses, while simultaneously trying to maximize your profit potential. Let me show you some ways you can do that with stop-loss placements and profit targets. So the first thing you might want to consider is what the market might be telling you. If the price crosses and closes above 2 out of the 3 moving averages, it might be a good idea to close the trade and accept a small loss. The second thing you might want to consider is the structure of the market. I will try to keep this simple. If you buy and the market is going to trend in the direction of your trade, it should make higher highs and higher lows. So, if the price is not going to do that, you want to cut and run to preserve your capital for the next opportunity. Therefore, a logical place to put your stop loss would be below the most recent swing low. If that also coincides with the other side of 2 or 3 moving averages, then that's a good place to put a stop loss. This is true for both buy and sell signals. As soon as the signal becomes invalidated, just cut your losses short. Now for the potential profit targets. I also have 2 techniques you can use here. The first technique will allow you to let the profitable trades run, so as long as the price is trending in your favor, you stay in the trade. You just wait. Let the trade unfold and get out when the price crosses and closes above or below 2 out of the 3 moving averages. If you are patient and disciplined enough to do this, you will catch some mega trades, and it's all good. The other way is to aim for a support or resistance level. You will have to use a little discretion here, but placing a take profit at the most recent historical support or resistance level has served me well. Look at an example here. The strategy would have signaled a sell opportunity around here, and the next significant support level to take profit would have been around here. Yes, there are going to be times when it won't get there, but you have the first technique to fall back on. And that's it, people. This is a very simple trading strategy for the Nasdaq 100 index, but it can also be used in any market and on any time frame. Just pick one you are comfortable with and give it a try. If you like fast action and want to trade more frequently, then focus on the 15-minute time frame. If you can't monitor the charts that often, then focus on the higher time frames. You can take this system as is, or customize it to your liking to make it your own. But the essence of it is sound. Good luck. Let me know how you get on, and remember to hit the like button and subscribe to the channel. It's the Fat Day Trader here, and I'll catch you in the next one.